Hello everyone and welcome back to the Mo Finance and News channel. This video is super duper important. Why? Because the government's going to keep changing tax plans, and this is really important for anybody, whether you're a trader, whether you're a business person, whether you're just an employee, no matter what job you're doing, whether you're a manager, anything you're doing is going to affect your taxes. And this article really is something we have to look through in detail, and we try to kind of understand and make sure you guys take this information and see how it applies to you in your daily life, in your current business structure or your home structure. But anything that the government does that could impact you financially, I really want to try my best to cover on here. I am sorry for the past couple of days delay. We've had some business things to focus on, but let's get into it today because this is super important. Okay, so step one, what we need to know about the personal income and estate tax proposals in Biden's proposed 2022 budget and tax plans. I personally don't know if this went all the way through yet, but it is important to be pre-ready, to be preemptively set, to understand what's going to happen so that as things occur, you're not reacting, you're more so proactive to get there, if that makes sense. I know I said that weird, but okay. So the first thing I really wanted to bring up is that the Biden administration, at least they have pledged not to raise taxes on households earning $400,000 or less a year, which is huge because that's a big deal. That's if you're impacting people who are making less than that, then the rich are just going to get richer, and us, the ones who are making way less than that, are going to get impacted negatively, right? So if this tax proposal is passed, it will likely increase the taxes for higher net worth households. By the way, I 100% agree with that sentiment. People don't need that much money to leave. Like, I do support the idea that you make your own money and nobody should take a majority of it away from you, because then you are incentivized to go out there and make decisions that were going to basically help the economy. But if you are out there making $500 million, or I'm just throwing a number, or any number that is just unnecessary, and you're just hoarding it, you're not necessarily helping the economy or the people around you. And at that basis, I see that as a negative. But I like what they say here. They really recommend that you review your personal income and estate tax planning strategies. And I support that. Personally, I believe whether you're a business owner, employee, manager, investor, whatever you're doing, you should be doing that every quarter or every month, depending on your situation. If you don't know what's going to happen in any sort of tax planning, whether you own an estate or just general tax planning, then you are always going to be behind and your money will be affected. Okay? Now, when is this supposed to take effect? If it is passed, it will take effect January 1st, 2022. So that literally means, you guys, that we need, so if it goes through in starting now, anything that's occurred this year already needs to be fit into this plan that they have. So what are some of the changes that are being proposed? They want to restore the top marginal rate to 39.9%. I think Trump's who brought it down to 37%. By the way, I don't care about Trump. I don't care about Biden. I don't care about any of the politicians. It doesn't matter to me what side anybody's on. I just care about how this is going to affect my pockets, and you should do the same, right? For household incomes with incomes of above $400,000, it's going up, so that's kind of helpful. 2% is not that bad. I don't think that would kill me, right? It also proposes to lower the threshold household of taxable income needed to hit this new rate of $509,000 for married couples and $452,000. That's not bad. That's good. They raise long-term capital gains and dividend taxes from the current 20%. Ordinary income tax rate of 39.9 for taxpayers' gross income is above $1 million. However, there's speculation that the new rate will end up being closer to 28 rather than 39.6. So that's a little stressful because a lot of us care about long-term capital gains. That's where we make some of these investments. So that's a little stressful. The dividends taxes, that's very important. So if you're an investor and you live on dividends, you need to make sure that this will not negatively impact you, or you find a way to kind of figure that out or write something. There's got to be a way, right? Tax carried interest, that's important, I think. They want to repeal Section 1031, like kind exchange rules for real estate. So I know what this rule is, and it's basically like when you have a property, you can exchange it for another property and not pay taxes. I don't think that's a great idea, but it's not a bad idea because, again, they need the tax money. We're so freaking much in debt. Tax capital gains when estates are assets are gifted or transferred to people at death. I hate that. But I also do think it's fair, because if you're just going to inherit a bunch of money and live off of that, that's kind of, I mean, it's not terrible. It's just not as fair as other people who grind it to get there, you know. They want to tax capital gains when assets are transferred from an irrevocable trust. That kind of sucks, but it is also fair, because if they're going to do it here, they need to do it here. So, okay, that makes sense. They're going to tax capital gains on unrealized appreciation of assets held in a trust if capital gains have not been paid properly. Again, same thing, because these are just methods that rich people use to hide their money. To offset the new provisionals triggering capital gains upon certain types of transfers. I don't know how this one would affect you in your cases, but for me, I don't think this one would impact me. All pass-through income would be subject to either the 3.8% Medicare investment income tax, or the 15.3 self-employment tax if it's greater than 400 grand. I think that's also not a bad idea because then everybody pays those taxes. The 15.3% self-employment tax would be imposed on active income earned from a pass-through. That's kind of important. So if you own a corporation, if you own a business, this is very, very important, whether you're being taxed as an S-Corp partnership or an LLC. This is important for some of the businesses that I own, so I'm going to very much utilize that section and try to understand exactly how it's going to affect my end-of-the-year numbers. Note, changing the 10,000 sold and that state and local income tax deduction cap was not addressed. However, it's possible, so we'll see if something happens. And then also no increase in estate and gift tax rate has been proposed. So that's good. What personal tax strategies do we need to discuss this year, or should you be discussing with your CPA or your tax advisor? You need to accelerate any gifts or appreciate any property you're thinking of making. That's really, really important. Get any estate planning involvement, transfers of appreciative assets by the finished year. That's super duper important. You need to review any sophisticated tax planning strategies, especially if you own a lot of properties. I don't, so I'm not going to stress, but that is anybody. Like, even if you have one home, you should at least look into this, right? Sell appreciated capital assets sooner rather than later so you don't get taxed that big number. Cash out carried interest positions. I think a big negative to this too that I see is a lot of people will now be in cash. So I do think we're going to see some markets drop, which entail would put us in a recession. So it's kind of negative to what they're trying to do here, but it's the Democrats, so they tend to do this, Transfer partial interest in real estate to your children. That's kind of important, especially if you already have children. Maximize retirement contribution to your Roth IRA. Very, very important because that's helpful tax-wise later on. It's kind of like investing in your own future, right? And then review your other tax-deferred sources of income. We're almost halfway through there. We really are. So this is really, really important. You guys got to start taking it seriously. I am now going to take it beyond serious, and I'm going to do my best to research and figure out how this is going to impact me directly. I really hope this information helped you guys today. Thank you so much for watching the channel. Again, please, I'm going to put that article below. You should take your time to just reread it yourself, double check, and please use this information to help you. If you do not take action, no one else will take action for you, specifically when it comes to your money. I watched an Alex Hormozy video, and one of the things he had said was like, nobody wants you to get rich but you. And I kind of think that is like pretty true to some extent, right? So if you're not working towards it, no one else is going to do that for you is kind of how I interpreted that. Well, thank you guys so much for watching the Mo Finance and News channel. Like, subscribe, and please comment below. Share this video. Hopefully this information gets out there and helps somebody anywhere possible. Thank you guys so much. Have a wonderful day. Bye.